My name is Andrew Stotson. I want to welcome you to another presentation by one of the students in the Valuation Masterclass Bootcamp. Almost all the students come into the bootcamp in a situation where they really haven't written comprehensive research ever before. In the first 6 weeks, they do their first research report, and then in the next 2 weeks, so week 7, week 8, they work on their second report. They only get 2 weeks to work from zero to completion. And that's what you're going to see right now is that completion. So let me So are you ready to rock?
Yeah, of course. Let's rumble into this jungle.
Yes, exactly. Hold on. That's when I was young, there was the fight between Muhammad Ali and Joe Frazier. They called it the rumble in the jungle.
Yeah, it is.
And Muhammad Ali said, "It's gonna be a thriller when I meet that gorilla in Manila."
I love that.
Yeah, and that was just such great fights. I tell you, Muhammad Ali and Frazier was just so, two men at the absolute peak of their performance. Speaking about being at peak of performance, we've got a presentation from you, and I'm going to turn it over to you. So you ready to go?
Yeah.
Okay, I'm going to remove myself now, and then you can start now.
Okay. So good afternoon, everyone. My name is Prut. You can call me Ethan. Today, I'm going to present you the TSMC on a sell side. Well, my recommendation is a sell with the target price around 1,223 Taiwan dollar. My method that I deliver is come from the discount of free cash flow model, which I use the 14% of the WACC and the 3% of terminal growth rate, which imply the 14.5 downside. The highlight of my story is about first, demand for the chip might slow down. The Intel 18A infrastructure could steal TSMC market share. And last one is TSMC could lose the top engineer. The risk of the company is about the insufficient of capital asset allocation, independency on the key technical talent, loss of the first mover advantage in lithography machine, and it about public training data for AI. You can see that on the graph on the bottom of the right hand side that currently TSMC is trading on a premium of the market. Well, we start with the first story is about the AI market, which theoretically the number of market share is around $432 billion. And the currently situation is that they can collect only the conversion, the payment from conversion rate is only 3%, and it's very low to make a money, or another word is monetization, and that create a huge gap in making a money from using the text data, and that's caused me to predict that the TSMC revenue to slow down in 3 to 5% in the near future, because it might take time for the AI market more than we think. Second will be the Intel 18A of the infrastructure that's currently is on the processing, and Intel also acquired a new high NA EUV lithography, and they is the one who get that, so they have a first mover advantage, which raised me a concern about this TSMC revenue that 86% come from the 3 to 5 nanometer chip, and mostly used in the HPC products, and it may cause losing out a significant part of the company revenue around 10 to 15%. The TSMC could lose its top engineer. As you can imagine right now that the US semiconductor engineering is paying around like $168,000 versus it's higher than 3x than the Taiwan's, combined with the stock-based compensation package. And these beneficial that US company can give to the big engineer can make a cause of TSMC to increase the bonus and salary for their own labor. and which will cause the SG&A to rise in a chunky amount continuously, at least 10% year on year on annual basis. Sorry about the company of background. I have to mention that it was founded in 1987 and is the first dedicated semiconductor foundry. Currently, it's the largest company that creates around 70% of the revenue in semiconductor as a foundry. And it also advanced in packaging testing service for the high performance computing. The main product, as I mentioned, is the 3 to 5 nanometer chips. So we go to the industry analysis. On the top of the left hand side, you can see the demand of chip is it keeps going, but it's lower. So the market size of semiconductor is 12.7 trillion, and this top five covers 70% of them. So you can imagine that NVIDIA is the biggest customer of them, and if NVIDIA change to use Intel 18A infrastructure, that will cause TSMC a huge problem. On the bottom of the left-hand side, you can see that from the data that I get, we are close to using all of the public data that we have to train the AI model. And with this lack of the data in the future, it might cause the demand for the GPU and lead to the demand of chip to be slower. And the last one is about the power efficiency trend in the future, that you can imagine that they try to produce the much more efficiency in power consumption of the chips. Now we go to the quarterly data. The TSMC create a sustainable growth for the last quarter around 30% year on year by improving the gross margin to 60%, driving by robust demand for the AI and high performance computing. All of the success come from the superior yield rate that they can produce on each node. The TSMC can deliver 80 to 90% on the 3 nanometer chips. However, the SG&A is also rising, as I mentioned earlier. Now we go to the constant growth. In this case, I mentioned it as a neutral. The first thing is the capital is a minor, which the company has a sufficient operating cash flow that the company deliver from a very fast cash conversion cycle. Second will be the operation, which is a major concerning for me due to the superior yield rate that they create by producing the 3 nanometer chip around 80 to 90%. However, the geopolitical tension on China and Taiwan is totally unpredictable situation and can harm company independence. And the upcoming of 2 nano chips still might not good as company predicted, as we don't know the situation currently. Market is not minor due to the near monopoly situation from the revenue market share point of view. You can see on the graph on the bottom on the right hand side. People are neutral as one of the most valuable assets of TSMC as a top-tier engineer that deliver a strong yield in each node that the company produce. However, there is no certain policy to keep this engineer to stay at TSMC forever. Now we go to the revenue breakdown. In the main revenue is come from 3 to 5 nanometer chip that mostly come from the order of Apple, Nvidia, Broadcom, and AMD. Mainly is the HPC. You can see on the picture on the bottom one that's cover 56% and the 30% in from smartphone. And two of these is a chunky revenue, 86 from the total number, and another 7 or 14 in the total is come from automobile and the IoT. Now we go to the FVMR. The company is highly attractive due to the exceptional fundamental in making a profit, which reflect by 40% of the operating margin. But valuation seems to be the only flaws of this company by the trading it on a higher premium around 72x of price to book on a PE. Sorry about that. The momentum is phenomenal due to the jump in revenue growth. However, it's quite fluctuated over time, and the risk is very low due to the company hold a lot of cash. Now we go to the world-class benchmark. In this picture, on the top of pyramid, the company is the king of in terms of profitable growth, which driven by the profitability. In the middle, you can see that. However, the growth seems to be neutral as fluctuated over time. On the bottom of pyramid, you can see that the company is the best in asset efficiency. However, they are also a great in expense control as well. In this slide, we just try to summarize that this company is above of the world technology company in Asia and the world by having the number higher than the average. Now, we coming to the breakdown of profitability that you seem that the company have the problem to use the fixed asset to create its sale. That's the number of the asset turnover ratio is lower than the average. On the other hand, create a margin is very easy for them. You can see they are top of the roof. Now, the depending on the markets on the sale growth and also the net margin change, you can see that the demand over time for the chips is fluctuated over time. Now we go to the ESG. The company seem to be a friend of environment by receiving a full score in environment part, which by creating a never breaking the rule, lower nitrous oxide emission, and having a product that leads to green economic sustainability. On the social side, the company is a good friend of their own labor, and by maintaining the safety first, maintain ethics, and also they also keep the human right as a first priority as well. However, the governance seem to be only flaws, so on. By they have the chairman and also the CEO as the same man, you can see that it's a Mr. Way. Now we go to the profit and loss, which a bit you can see that I use the 20% of revenue growth rate, and SG&A is keep going as I mentioned. Now we go to the balance sheet, and you can see in this case that company is the king of cash, but they have a huge of cash in as a current asset, and on the other hand, they have a net fixed asset in a huge number too. So you can imagine that the EUV machine that they buy from ASML is in there. So the capital structure of the company in this case, you can see that most of them come from the retained earning, and just a bit of them come from the long-term debt. However, I strongly believe that in the future, company will tend to use debt more because they have very low cost of debt. Now we go to the cash flow statement. As I mentioned, that the company need to buy a lot of EUV machine from the SML. So the capital structure, the capital expenditure is, or the capex is also the main expense. However, they can use the operating cash flow to buy the machine and also pay the dividend and have some cash left. Now we go to the ratio. The ratio that I love for this company is a cash conversion cycle. They have a negative number, which is very rare to see, as they get the power from collect first and pay later to their supplier, as you can imagine. Now we go to the free cash flow data. As you can see, that's the free cash flow of the firm, and free cash flow to equity is really close. It makes sense as the company cost of structure, capital structure have been come from the retained earning, most of them. Now the relative valuation in this case is quite a bit. It's telling us that TSMC is trading on a premium compared to Taiwan and Asia without Japan, and this caused the price is slightly on a premium. This one is also the same thing, as you can see. Now we go to the valuation and my target price. So the cost of equity that I coming from is around 14%. I put the risk-free rate as a 1.5, and I think this is the maximum that they will use. And calculate the VLCC, the final number is 30%. I think it makes sense because most of the company come from retained earning, and it should be higher in cost of equity. The free cash flow model that's come from the price of 1,223 and implying the 14% point five of the downside. My sensitivity analysis, I use the 56.4 gross margin with the 3% of terminal growth rate, which is the best case on my assumption on this page. You can see that mainly focus on the gross margin change because I believe that the company is a market taker. They are not a market creator. So we go to the final one, which is a risk of this company. So my first point would be they hold a lot of cash, and which is a good asset for liquidity, but is a bad for return. And in my opinion, TSMC should use the cash to invest in other company, for example, like Synosys and Credent Design, that they are directly use this software for sure. And the second strong point is that the yield success rate in each node of the chip that they produce is come from the technique of the top tier engineer, which is the company top secret, but there is no significant protection or significant mention how they can keep them stay at TSMC forever. The other risks losing the advantage of claiming in high-end AEUV, unpredictable of AI demand, strong risks, and also the market taker, not market creator, is also the risk that can affect the company price as well. And that's it. That is my TSMC on sales side. So I'm very happy to collect the question if you would like to ask.
Great. Okay. So the first question comes from Surya, who says, what makes you feel the demand for chips is going to go down as the AI adoption is already growing and would grow even higher in the future? And I think you should go to that first story of yours, because I have some question about that too.
Yep.
So,
Okay.
yep. Demand. What makes you think that demand for chips is going to go down?
Because as AI for B2C is very low to monetization, you can see that's only like create not even close to 10%. So it means that they put a lot of money to create a data center to feed the AI and train the AI. However, they didn't have ability to collect the money from this business. And right now you can see that OpenAI is handle this connection with Oracle. So in my understanding, because most of the bank company hold the data in Java form and it's a private data, and it means that right now they know that they need a cash, they need something that they can trust, like a B2B AI. So it means that right now we need a lot of time, and with the private data you need more time to create the AI for different infrastructure of code, and dead air, I mean the pocket air of that time will cause the demand to slower and lower.
Okay. And then if just to go through your numbers, you said 1.8 billion users, let's assume they spend $20 per month. The market
Yes.
would be, you said 432. My calculation comes out to about 475. But either way, let's just take 432.
Yes.
So 432 billion, you're saying, is the potential market. And what you're saying, where did you get the 12 billion?
Actually, I get from the data source that most of the company that paying, most of the, I mean the AI that we keep paying like ChatGPT, Gemini, they collect the data from the paying number, and also the user. Of course, the user account will be a tons of number, but however, the person that click to pay to use a premium service is only like 3 to 5%.
Okay. So your argument is that the companies aren't able to monetize, and therefore eventually they're going to have to slow down demand for chips. Is that what you mean?
Yes, but you can imagine that, I mean, GPU, I mean, Blackwell, of course, it costs a lot of money. And how did you know that you buy this thing? And in the future, you don't know the demand is going to be there or not. It's not
Yeah.
like a piece of paper that you can buy like very easy. Because when you gonna invest a lot of money into something, I think as a investor, I would like to know the demand first, and we don't talk about that much.
And it's hard to believe, but it's possible that we could see demand fall. But also, what could happen is companies like ChatGPT could end up struggling, and that demand goes to the Microsofts and the Googles because they already have a platform to monetize. So all they're doing is bringing an additional product onto those platforms,
Mhm.
and then in that sense, a portion of the fees that people are paying for their services from Microsoft and Google are going to be accounted for as revenue for AI. Is it
Mhm.
possible that it goes like that? And if it does go like that, does that still mean that we're not going to have nearly as big of a market as someone may think?
Okay, so of course I also think about that, but I'm looking at the B2B side.
Hmm.
But right now, I mean, the subscriber or the user of the service will be the B2C, most of them.
Right.
And you mentioned this is about the cloud market. It's different from this market a bit. But however, I mean, imagine like this, even that you're putting a lot of cloud, uh, like you're putting a lot of chip to create a cloud service. But my question is that when you create a account, you collect the data, but right now you are running out of the data, the
Mm.
public data, and the public data and the private data is in different form. And how do you gonna use the AI plus the private data to create something like
So the
in
cost
ChatGPT?
the cost of training the model is going to rise and slow.
I don't afraid about the cost. I'm afraid about the time
Right.
consumption
Okay.
because you can imagine that the JavaScript is the main language that
Mm.
big company use because they are very old one. However, a lot of company didn't want to release the private data as they want to keep them as a private. And to using the AI is kind of like a bit of conflict that you try to use the AI faster, but however you cannot open this data. And how much time you think that's gonna need to consume to bring this thing together? So that's the big question, and we don't know yet.
Okay. The next question is about the third story that you have about losing top engineers. But in your constraints to growth section, you mentioned that the constraint related to employees was neutral. And that would seem, if it's a story point for you, it may seem like it's serious compared to neutral. How do you reconcile those two?
Okay, is my in my understanding, because the yield rate is there, this mean that they also like keep paying the labor, I mean the top tier engineer as much as they can by increasing the salary, a bonus, and if I remember it correctly, the bonus will based on the communal revenue. I think that makes sense. However, I mean, with this third one, as you can see that a Trump golden card, I mean, can give you the immediate access to US company. And Trump is very tricky person. I don't think
Hmm.
create something like this for without any reason. So it's not about, maybe it's not about the rich person. It's about a smart person that he want to acquire as much as possible.
Okay. And Roman asked the question, if I were a fund manager, I'd ask you, what's the biggest risk of including TSMC in my portfolio? So you listed out a series of risks, but what do you think is the biggest one? Is it the slowdown that you're thinking about for demand for chips, or any other point? What would be your number one risk?
Okay, my number one risk will be losing the top tier engineer because the TSMC have what I say need the top tier engineer to create a very high yield. You can see that I mentioned that they create around 80 to 90% of the success rate. Sorry about that.
Mm.
And by the 80% of the 90%, it means that the company can create a very good gross margin. You can imagine with a higher cost but a lot of higher success rate, it means that you can get as much as the gross profit as you can. But if you are the company who can like create like 50% of the success rate, so you need to charge your customer higher. And a very easy question, why should I buy the same thing at a higher price when I can choose TSMC as cheaper? And that cheaper is a top secret of the company and is high in the top tier engineer of TSMC.
Okay. Last question comes from Lee, and that is, have you factored in geopolitical de-risking? TSMC is funneling billions into the US and Japan to try to, get its manufacturing out of its exposure to Taiwan.
Okay. I think they try to like diversify where they produce the chip around the world, but also like critically in US they try to go to US because as you can imagine that it's about the tariff that they have to pay to the US, and that create the force of the market to put the company back to US. So with this thing, uh, trying to do business around the world to protect. I mean, you can imagine tomorrow maybe Sanae gonna coming and said, "Oh yeah, I wanna get a tariff too." And what if like you don't have a company located in the Japan, which is one of the top tier company, top tier country in the world.
Mm.
So it's a great diversified policy as well. So that might lead come from the policy that is totally unpredictable.
Okay. How does it feel to complete this assignment?
So a lot of things like putting a lot of effort, putting a lot of my blood, my tear, my soul, everything coming out here after a lot of help from Lee, Moem. The way I dress here to
Mm.
respect them that if I go lower than this, it will be a shame to them. So
Yeah.
I try to create this thing to be perfect as much as they can to respect them from their help.
Yeah.
And yeah, that's how I really go intense with my work. Yeah.
Yeah, we have a great community of people, ready to help. So, and how would you describe, the change that you've seen in yourself, the transformation that you've gone through from the day you came into the Valuation Masterclass Bootcamp till today?
First of all, hard work area. A lot of effort to put on them. Uh, a lot of good connection, a lot of good help coming from. Learn a lot from valuation the company. Sometimes like in myself that's when I put the numbers, it doesn't make sense for me something. Uh, but I try to like understanding what it is inside and what is it should be and it should make sense and try to connect the story with my forecast. I think
Mm.
that's a crucial part, and that will lead me to be a reasonable analysis. An analyst. Yeah.
Mm. Great. Lee, this is the last comment. Lee says, "You are awesome. Well done." So, congratulations. All right.
Appreciate that, Lee.
Yeah. Now it's time for you to relax and enjoy the weekend. And then I'll see you on Monday.
Yeah. Merry Christmas, everyone.
Yay. All right. Take care. Well done.
Yeah.
Well, that's 8 weeks into the Valuation Masterclass Bootcamp, created his second report, complete report. And it's a challenge. And it's a challenge to create a report from scratch in 2 weeks on a company you never knew anything about. And I have a lot of respect for my students for the efforts that they put in. And I also have a lot of appreciation of the team that we have to support the students in their journey. If you want to build a competitive advantage in company valuation, why don't you join us in the Valuation Masterclass Bootcamp? The next one kicks off on February 16th, 2026. I can't believe it's already 2026. Incredible. I'll see you in the Valuation Masterclass Bootcamp, and hopefully I'll see you presenting live just like other students.